Howdy, folks. Dr. Jeff Camarda, Monday, May 4th, with your continuing Corona crisis change update. This will be a pretty long video, so you may want to hit the pause button, go grab a cocktail, and come on back. I'll wait. But have a lot of things to report. First of all, in market news, the market, which was kind of a soft day, started off quite down in the wake of trading overseas. And continuing the losses, sharp losses from late last week, but wound up finishing about flat. So I guess, no news is good news as far as the market is concerned. We do have some good news on the COVID front. The Gilead Pharmaceuticals, which those of you in the Caesar portfolios may appreciate that we owned for some time, well before COVID hit, just because we thought it was a good, cheap stock. It's done, we think, rather well. But their drug has been approved for more extensive use and apparently has shown a good bit of promise in helping curtail the worst symptoms and the worst cases. So that certainly is promising. Also, Hop and LaRoche is Swiss pharmaceuticals, the firm, over the weekend released that they have developed an oral or spit test, which apparently is much more accurate than the old nostril swab test, which I guess is the standard so far, which is awfully uncomfortable. Some folks have described it as actually having touching your brain there. That brings a Ghostbusters quote to mind. So not only is it quite invasive, but you got to get very close to the clinician in order to be tested. So I'm like, gee whiz, is that the risk of getting the virus worse than mowing? I didn't like the swab test. The spit test looks really cool. It's also more accurate. Apparently, they're cranking them out like gangbusters. So that could be a real game changer in terms of evaluating who's had it, who's got it, who's safe to interact with others. So that's pretty good news. On the bad news front, China's economy, the numbers, and again, they were kind of ahead of the curve here and should be well on the mend, but their economy still is really quite tepid. And again, it's hard to trust the numbers out of China, but certainly is not all roses and lotus blossoms in the Middle Kingdom. It's also interesting. There's been a lot of speculation over why some areas like New York and London, LA, and other hot pockets of viral activity just have been, hammered, devastated, and other areas like Florida, have been relatively spared. And, it's nice to think that maybe we lucked out or did something different, but my fear is it just ain't hit these areas yet, and there's a lot more pain to come. I hope I'm wrong. But quoting from, I think it was probably an editorial in the Times over the weekend, the Spanish flu that broke out, and again, I'm looking at my monitor here where the quote is, in the U.S. in 1918, and about 100 years ago. That's kind of spooky, right? Seemed to die down during the summer, only to come roaring back with a deadlier strain in the fall, with a third wave following the next year. It eventually basically enveloped the globe, reaching far-flung places like Alaskan islands in the South Pacific, which, remember, back then were quite isolated, not like our global integrated society now. And so this one doctor at Harvard Global Health Research Institute, Dr. Jia, says that this were a baseball game, it will be the second inning, and there's no reason to think that by the ninth inning, the rest of the world that looks now like it hasn't been affected won't become like other places. So that's sobering, and I guess I'm in that camp. It hasn't spread yet, but it's invisible. And as Neil Young, to misquote Neil Young, Russ never sleeps. Also relatively sobering, and I'm sorry for this continuing drumbeat, but I'll try to end on a good note. Warren Buffett's famous Woodstock for Capitalists annual meeting occurred over the weekend. There were just two of them in the room, I understand, unlike the thousands and thousands that typically throng that stadium. And while he was, superficially upbeat, as Jim Cramer said today, his, what he didn't say really speaks volumes. He said you can't, stop America. He also likened the recoveries and hark back to the recoveries after the 1929 crash. It took a long time. At 29 before things got back to normal. And it's also quite sobering to note, that Buffett, sitting on a huge pile of cash. It has been for some time, even in the current environment, is not buying anything, including his own stock. Which is really, and he said something like, gee whiz, we just don't see anything that's attractive at these valuations. That's not very encouraging. He also, many of you know that Berkshire Hathaway, his company, owned huge position in 4 major airlines, 10% each, just huge, and sold it all. Just sold every share of airline stock, which obviously is not a promising sign of the expectation for resumption of normalcy in airline profitability, and by extension, just normal economic activity. And planes are pretty important to modern commerce, and I think that's really going to dampen things. Continuing the drumbeat of negative news, the deficit, the federal deficit, and again, the monetary stimulus money is just pouring into this open COVID wound, this open economic wound, and it's probably isn't even close to enough yet. And they are projecting the deficit will be the highest in 75 years, exceeds gross domestic product, and probably get much worse as debt soars and GDP shrinks, as we mentioned last week. And I think that there was a report this morning that they have already committed 6 times the economic stimulus as was used in 2008, 2009. And it probably ain't going to be nearly enough. Trillions and trillions and trillions of dollars are being borrowed and printed, and one day them chicken's going to come home to roost. So that's pretty much all I have to say about that. We continue to be very happy that we're in cash, kind of watching and waiting. We have some more companies reporting this week, next week, and we still are of the opinion that things will go a good shake lower, and looking to pounce on what we feel opportune situations when it happens. Could be wrong. There's no assurance of that. We'll probably stage back in rather than go all in when it happens. And we could, we still have 2 more waves of selling. We've gotten out of most of the more aggressive stuff, but 2 more waves of selling in the playbook. Whether or not we execute those plays remains to be seen. And finally, I want to, I'm going to change computers here. Oh, gee whiz, how do I get over there? Let you all know we'll be doing a number of webinars, TaxMaster, I should say. I'll be presenting on behalf of TaxMaster over the next week or so. We have 2 tomorrow at 10 a.m. and I believe 6 p.m. You should have received an invitation from TaxMaster. If you haven't, please email me, jay@taxmaster.com, or actually taxmaster.us, jay@taxmaster.us, and I'll shake Rick Martin's cage and make sure those invitations went out. But this is geared for physicians, but there's an and a lot of docs will be in attendance, but there's also a lot of really salient wealth and financial education that most of you can use. And the overall name of the workshop is the 3 golden keys to greater wealth and security, applying financial science to accelerate wealth and control risk, bulletproofing assets to protect them from lawsuits and financial predators, and converting needless taxes into personal wealth and retirement savings. If you'd like to join, you're going to need to hit a reservation link at TaxMaster. So go ahead, open up those emails and go ahead and make your reservations. And if you haven't got an invitation, by golly, go ahead and email me, jay@taxmaster.us, and I will shake the tree till some fruit come pouring down. And that'll wrap it up for today, folks. Thank you so much for watching. Hope it was only a 1 cocktail video. Until tomorrow, this is Jeff Camarda signing off for the Knots. Adios. There's that pesky mouse to turn this thing off. Come on now. Well, we got to go that way. Sorry about that, folks. Have a good night.